Hey guys, can you hear me now? I think I totally forgot to add myself to the stage, so that's probably why you guys couldn't hear me. But let me know if you can hear me now. Just put it in the chat, Luis, OJ. Okay, awesome. Wow. So that means you guys couldn't hear anything I was saying the past couple of minutes. All right. All right, I'll start again from the top. So Luis, good to see you. OJ, nice to see you in the chat as well. Um Anybody else I'm missing in the chat, just let me know you're in here, and we can answer any questions you guys have today about investing. I'll give some updates on my portfolio, just some news I'm sharing. Um, but yeah, I mean, I put out that video on JP Morgan Chase. So let's go back to how Chase is doing here. So Chase is kind of one of those companies that kicks off earnings season. So they announce earnings a little bit earlier than most other companies, but they are a big catalyst for how the rest of the economy is going, right? Like basically every company is taking out loans with Chase or one of these other big banks. Uh, JP Morgan Chase, $500 billion market cap, huge company, right? Like history dates back to the colonial period, right? Alexander Hamilton, I believe, was one of the founders. So Chase, big player in the economy. Now, Chase stock actually went on a little bit of a dip here when they announced their earnings. So you can see that kind of a sell off right when they announced their earnings. They're trading close to $200 per share. Then they had that little bit of a dip. And that's not necessarily because Chase announced bad news, right? Like Chase, the company is actually still doing pretty well. It's that they didn't raise their guidance for the rest of the year. They're anticipating the same interest income that they announced during their last earnings call. So that's what kind of spooked away a lot of investors is that, they thought the economy was doing better. They thought inflation was doing better. Um, and that doesn't seem to be the case, right? Inflation is still not under control. And that's really hurting, I think, just the overall economy here is that, you have inflation that's eating away at people's buying power. It's keeping a lot of us, I think, in unfortunate situations. I know it's tough to buy anything these days. So that's kind of what's going on with Chase. Basically, they just announced, hey, we don't think inflation's under control. There's obviously some global conflicts going around the world, and that's why they didn't raise their guidance. And Wall Street wasn't ready to hear that, but that's kind of why they had that sell off. But as a good investor, that those potentially are some of the best buying opportunities. So as I mentioned in my video from earlier today, I've been a Chase shareholder since 2018 now, and I'm up well over 2x in some of my shares. Like if we go back, even what it was trading at in 2018 when I started buying in, I remember during C19, it fell all the way to the 80s. So definitely double that. When I started buying in, it was around 110. And I remember when it dipped a little bit, I was like, why did I buy this stock? And then, of course, that was when it was like around $90 a share. It is almost 2x since then and paid dividends every quarter as well. So it's part of the reason why I bought into Chase, strong company. Yeah, so that's kind of what I was talking about when I was muted about Chase. But another company that's been on a little bit of a dip is Starbucks. And if you guys have any companies that you want me to talk about, just let me know in the chat. And we can cover that. As you know, I have Seeking Alpha. I'm a partner of them, so I can kind of view any articles for free if you guys are interested or curious about any of that as well. So next company we're going to talk about a little bit here is just Starbucks, another company that I really like at some of these prices here. They've had a tough last year, down 18.24%. So, obviously Starbucks, I don't think is going anywhere. People still need their morning coffee. But Starbucks has been having a big problem with their unions, right? A lot of their stores have now become unionized. And it's tough to get, everybody on the same page there, especially because a lot of these unions, they're kind of putting out some of these messages that are political that don't necessarily align with what Starbucks corporate is saying. And of course, it's very heightened times right now. So a lot of people are kind of boycotting Starbucks because they're thinking what the union is putting out is indicative of what corporate is saying, when that might not necessarily be the case. So that is kind of why we have kind of this disconnect here. Hey, Richard, how's it going? Glad to have you in here as well. So yeah, Starbucks close to a 3% yield now. $100 billion market cap. Definitely got to keep an eye on those earnings. I think it's going to be some pretty good news there. All right, Louise asking, what about Dutch Bros? So Dutch Bros, I've had it once. It's, I think it's more of a West Coast thing, if I'm not mistaken. I had it once when I was visiting Washington State. I thought it was pretty good. There's another coffee chain there that they don't have here in the Midwest. It's called I think it's called BlackRock, not the asset manager. Something it's similar to BlackRock. I was thinking to myself, does BlackRock own this? But I actually liked that one better while I was out there on the West Coast. But Dutch Bros was pretty good. Definitely some interesting, looking people when I was in line there. But yeah, I mean, I've heard pretty good things from other people about them. Looks like they haven't, they've only IPO'd about 2.5 years now. So still a pretty young company, $5 billion market cap, not very big at all. Looks like they might be profitable now, as I see a PE ratio, but 92, that's quite the high valuation. So, Luis, are you a big Dutch Bros fan? I don't know. I don't really drink any other coffee other than Starbucks. Started to see a couple more Tim Hortons around here. I'm trying to think what other coffee. Dunkin' is obviously super popular. What is another coffee place? Even McDonald's coffee, often when I'm traveling, I kind of prefer the McDonald's coffee just because I know exactly what I'm getting. Sometimes when you're you're eating or drinking at a place that you've never been to, there's a risk that you might get something and it might not taste great. So sometimes I like to just know what works. Yeah, so you've never had it. I still think it's a West Coast thing. I haven't really seen them around. Definitely not by where I live. We actually here in Illinois, we have the McDonald's spinoff. It's called Cosmix, and I've heard that's actually really good, and it's been doing pretty well. So I think those are gonna be expanding more, and that's owned by McDonald's. They focus more just on coffee, and all that. So Richard's saying Modern MBA, which is a great channel. I watch them as well. They did a great video about why Starbucks must crush unions. Yeah, I think, the more and more of these corporations, they probably don't like unions. The company I work for, some of our manufacturing plants are union, some are not. Always some interesting rules with the unions that they're, can kind of eat into those returns. But, I do see where the workers are coming from as well sometimes. You're denied a promotion or you're denied a pay raise. So, I see where they're coming from sometimes as well. But I think as I was saying when I was muted, nobody could hear me. I think California recently raised the minimum wage for fast food restaurants or just restaurants in general, where it's now $20 per an hour, which is insane. $20,000 or $20 an hour. 8-hour shift, that's $160 before taxes. Man, I think those are going to be the jobs that get cut right away to robots, to AI. There's no way that these fast or restaurants are going to be able to eat those margins. Margins on restaurants to begin with are pretty low, right? So having to raise that, and even just fast food prices, man, Taco Bell, a simple burrito is now $10. just absurd. Everything with inflation. But yes, I agree. The Starbucks needs to get a hold of those unions. This is obviously causing big problems with them, their share price, investors like myself. So yeah, never had it. We'll see if they keep expanding. I'm sure they will. So OJ says, I have seen some coffee companies come and go. People thought Pete's would be big. Yeah. I mean, I feel like that's the thing with coffee is that there's probably not that much of a difference between like one coffee chain versus the other. Like the taste for this, for the most part, is going to be pretty similar, where like people aren't going to be that loyal. For example, if there's a bunch of coffee chains in my area, I'm probably just going to go to the one that's closest to me. I'm not going to like, or maybe even cheapest. I'm not going to be like, oh, I only drink at Starbucks or something like that. Yeah, Luis thinking just like an investor. If it makes you money, I love it. All right. Richard likes his coffee cheap and black. Yeah, lately I've been putting a lot more sugar into my coffee than I should. I have to say those like frappes at Starbucks are very tempting and definitely adding a lot of calories, but would be much healthier if I just had it black. And then OJ's been buying McDonald's. Yeah, so we can talk a little bit about McDonald's stock as well. Yeah, so they're back to 271. You can see here around October, they were hovering around 240, kind of recovering since then. Still kind of in line with where they were a year ago, a little bit higher at 290. That dividend yield, 2.5%, not too bad. $200 billion market cap. They did announce a dividend raise not too long ago. So, I mean, obviously, McDonald's is a dividend king, I believe. This is not correct. They probably do have 50 years. I'm almost certain of that. So, yeah, I mean, McDonald's, you kind of know what you're getting. It's just one of those you keep buying and holding. And people are able to afford it. People keep buying it. I actually just recently downloaded the McDonald's app. They actually do give you some like really good like promotional offers. Like you can get like an entire entree for free, which is pretty unheard of at other like restaurants. They're not going to just give you a free like Big Mac or pretty big item for free. So really been liking the McDonald's app. I usually try to motivate myself by going to the gym and then eating it. But obviously that's going to catch up to me in the long run. So I'm trying to limit it. But yeah, McDonald's, great dividend paying company. Share price has also been pretty good over the last 10 years, up 169%. So that's McDonald's there. Hey, what's going on? 1929 A-Bone pickup. If it doesn't make dollars, it doesn't make sense. Yeah, that's a good one as well. Yeah, I mean, restaurants just in general, right? Super small margins. That's why, it's tough that's why you see so many like small mom and pop like restaurants close after a couple of years. It's so hard to be profitable in that industry. Louis saying McDonald's coffee is good for 99 cents through the app. Yeah, luckily, usually whenever, because I work from home, usually when I do have coffee, it's when I'm traveling and my company pays for it. So like I'm not, really looking at expenses as much. But that's good to know. If you do it through the app, it's only 99 cents. Nice little hack there. All right, so I did want to just kind of go over my portfolio. I have a couple slides here for us, and then we can kind of talk whatever again. So I will just present here. All right, guys. So talk a little bit about the portfolio here. So as I was telling you guys, been doing a lot of remodeling at my condo. So that's been kind of inhibiting, money that I would normally be putting into my portfolio has been going toward those expenses. The plus side is that, that's now completed. Thank God. It was it was waking up super early every day to let the contractors in and, hearing noises at all times of the day. But the good news is that, hey, they did a great job. And that also added to the value of my home too. So even though I'm looking at my bank statement and it's showing like $20,000 plus of expenses, that's money that that is now going toward my house, right? So I feel pretty good about that. Like, I hated to splurge, but it's coming back to me one day when I do sell the house. So, let's say my house is worth $330,000. If I do $20,000 worth of work on it, it's now worth 350. So that's kind of the way that I justified that. But portfolio, it's around that 170 mark. It's actually down 17K since March, and the market hasn't been doing that well recently. So, semiconductors, you guys know I love semiconductors. Like Nvidia was down like 10% the other day. Excuse me. And ARM company that we talked about, I knew it was super overvalued at these prices. ARM is down like 17% the other day. And I think it's going to keep falling. I think that company is vastly overvalued right now. Like, the company doesn't even make $1 billion. But it was trading at like $130 billion market cap. Absolutely like ludicrously overvalued right there. So now that I'm done with that bathroom remodel, that's going to be more and more money that I'm able to kind of now be able to put back into the portfolio. Also, I have one more dental cleaning, which will, I already maxed out my insurance this year, unfortunately. This is the year that I found out that like dental insurance is kind of like a scam in America as well. So that's going to eat into a little bit of that as well. But, as I've learned, it's important to take care of your health, because like it's going to cost you one way or another down the line. So, that's another tough expense, but, I'm definitely getting close to paying that off, and, more money to buying stocks, especially when they're down. Great buying opportunity, in my opinion. All right. So the good news is that even though I wasn't contributing much money, kind of the first couple months this year, is that my dividend companies were still cashing in those checks for me. So it was really nice to see my portfolio still going up, even though I wasn't directly contributing anything. So you guys know, like, March is my biggest tranche. That was another $400 month in passive income. So just really excited. That's what gets me like super excited for the future, is that like there will be a day when like my dividend checks will outpace what I'm actually making from my regular 9-to-5 job. And this is kind of proof of it, right? Like, it was tough for me to not be able to contribute to my portfolio, but it was so refreshing to see that like almost every day still had companies paying me. So that's really nice. So kind of working on that March dividends video still, but it's going to be in the ballpark of $400, which is just amazing. I think I have a serious chance of hitting $500 in my biggest tranche by the end of the year for sure. I think, especially if I keep adding some of these juicy income ETFs that we'll talk about here in a little bit. All right, so we got Jay in the house as well. What's going on, Jay? So Jay is buying Starbucks, McDonald's, and Chevron. Okay. So yeah, no, Chevron oil prices, that's been a hot topic lately here, with some conflicts going around in the world. If you think I'm saying some of these situations kind of weird, just know that I have to say it like that because of YouTube. Certain words get demonetized. But yeah, no, those are, definitely agree with you on Starbucks there. I think McDonald's, it's probably at like a fair price as well. I haven't really checked out what Chevron's price is, so keep an eye on that one as well. Richard says, I have no problem trading with North Korea. That's how much of a free marketer I am. Yeah. I mean, I don't know. North Korea is always an interesting topic. Leave it there. Jay says, as long as there's money in it, I don't care who we trade with. Yeah. I mean, there's probably going to be some big, sanctions if there's not already on like Iran, all these other countries, Israel. So we'll keep an eye on that. I know like just kind of global trade is in a funky spot to begin with because of the is it the Red Sea, and the Houthis are causing some trouble with a lot of the big cargo ships there. So that's been a big problem. Also, just the Panama Canal, because of the El Nino like rainy season, that's causing huge problems there as well. So yeah, I'm actually surprised we don't see that on the news more often, but those are some pretty big stories as well. All right, so yeah, for me personally, some companies that I think are super discounted right now: Starbucks, as we talked about; Apple, which is being like sued by the government for apparently having a monopoly, because apparently you can't buy any other smartphone out there. It has to be an iPhone. If only like an Android didn't exist. So Apple's at some pretty attractive prices. It's pretty rare to see that stock go down. But yeah, at the same time, I was also pretty shocked to hear that Apple shut down their electric car program, which I know they probably poured billions of dollars into. That was a pretty big shocker for me. Because first of all, I don't think they ever actually announced the car. It was something that was like a very poorly kept secret for such a long time. So Apple continuing to fall here. Apple, of course, like even if you don't directly own it, Apple makes up such a big part of so many ETFs, especially if they're market cap weighted. Because Apple is almost a $3 trillion company. So in one way or another, the market is definitely feeling the pain of Apple's share price slipping. So going to definitely keep an eye on that earnings report here in the next couple of weeks. And then I started buying back into Vici Properties. As you guys know, I used to own well over 100 shares. I was doing like the wheel strategy on them, and then it got called away, so I was like back to like less than a share. But Vici's, a lot of these real estate companies, they're also trading at a discount now with these interest rates. A lot of people thought they were going to get cut. It's likely not going to happen for a while. So a lot of these companies like Realty Income, Vici, even Equinix Data Center REITs. What other REITs? What other real estate companies are you guys liking right now at these prices? There's Vici, Stag Industrial. I've been buying in my Roth. But yeah, a lot of these real estate companies trading at some pretty attractive prices. And the thing about REITs is they need to pay out 90% of their taxable income. So we're still getting pretty fat dividend checks, right? It's not like they're having issues with tenants not paying. So those are some pretty juicy dividends that are still coming in. All right, and then we talked a little bit about interest rates earlier. So interest rates, the Fed is not able to cool off how hot inflation has been. Like, I mean, people should have known about this, right? Like when you print so much money like the Fed did during COVID, I'm not surprised. Like, what's the statistic? Like 1/3 of all U.S. bills right now that are in existence, like 1/3 of them were printed during COVID. Like, of course, there's going to be mass inflation. So we're not anywhere near being able to tame this. So the Fed's target is around 2%. We're still around like 3.3%. So still a lot of work to do there. So a lot of people were anticipating interest rate cuts to happen as soon as June of 2024. That's almost certainly not going to happen anymore. Like the Fed said there was going to be about 3 interest rate cuts this year. There's a very good chance now that that's not going to happen at all. Like we will literally get to 0. And the new expectation is that they might now start happening in March of 2025. So that's 11 months away. That's a huge, downer. And that's kind of why you've seen the stock market not do as well, because a lot of people already had interest rate cuts priced in. That's why the stock market did so well recently, or prior to this most recent downturn, kind of ever since Q1 ended. So we're now in Q2. So that's kind of what's happening, guys. That's why you see stock prices fall. It's because of this. All right. So Richard says before the bats, the bat sickness. Hey, how do you know it's not the laboratory sickness? If I didn't make my own coffee at home, I would make a purchase at McDonald's. Yeah, for me, I can't I don't really drink coffee at home. It's only when I go out. But yeah, I mean, you definitely do save a lot of money just making it at home. Okay, I prefer COP. Let me look what that is real quick. Okay, so this is another oil company. 3.3% yield. Okay. Yeah, I mean, I'm assuming you think it's at a attractive bargain right now as well. Then, all right. We also have Andre in the house. What's going on, Andre? What do you think of the volatility ETF ZIVB at a 26% yield? I picked up a few shares this week, but it seems similar to SVOLV. Okay, so one, I did have an interview with the fund manager of SVOLV. Really great guy. And that video will be coming out. I'm gonna have to split it up into two parts because it was like a 40-minute discussion, and people's attention spans on YouTube these days because of TikTok and whatnot is not 40-minute video isn't going to do it. So yeah, SVOLV I mean, in my opinion, it's like a totally different asset class because you're kind of betting on volatility. So I haven't heard of this ZIVB. If we could potentially talk about it here once I'm kind of done with the slides. I'm not sure who even runs that. Volatility shares. Yeah, I've never even heard of them. Kind of based on the name, I'm going to assume that's probably what they're doing. If they're doing it on the VIX by this CBOE, the Chicago board. So I personally don't own SVOLV yet, but I have been keeping an eye on it. Especially if we have increased volatility here, like we've been having, could potentially, still get a pretty big dividend yield every single month. It's kind of a way to hedge your investments. That's the kind of the way I see it. Excuse me. So next comment here, 1929. What about them cocoa prices? Yeah, I mean, I've been following a lot of these commodity prices, but I'm sure we're all feeling it with our wallets. Every time we go to the grocery store, it's still somehow way more expensive than I remember going last time. Like I went to Costco this past week and I only filled up maybe like 25% of my shopping cart, and I still somehow managed to pay $200. And I'm a single guy, don't have a family. Like I don't know how people can afford to do this. Like if you had like a family, mouths to feed, I mean, I can only imagine how much you're spending at the grocery store these days. All right, so let's go to the next slide here. Again, this isn't necessarily about investing, but it is news. So I just wanted to cover it. So I'm sure anybody that's like read the news lately has heard of Caitlin Clark. She's arguably, I mean, she hasn't even entered the professional leagues yet, the WNBA, but I would already say she's probably the best female athlete, especially specifically in basketball. But I have a feeling she'll eventually eclipse, whoever we consider is the best female athlete. So, yeah, I mean, she's been like nonstop on the news. March Madness, she played for Iowa, lost in the championship game, but she was the top pick in the WNBA draft this past week. And a lot of people were saying that she was, vastly underpaid and that she deserves more money. So she actually signed a 4-year, $338,000 contract. The number one guys player last year, Victor Wembanyama, he signed a 4-year, $55 million contract. So people were saying that, this is like, like a gender thing, and that, she was getting underpaid, and that, we need to change this. We need to fix this. This is unfair. The system is rigged for females. I don't know. What do you guys think about that? Like, for me, it's sure. I mean, yeah, it's kind of like, I guess if you just looked at the numbers, I guess it's unfair that she's getting paid less for playing the same sport. But it's, it's supply and demand that dictates how much you get paid, right? Like the reason the men are making more money is because they're constantly selling out the arenas, the jersey sales, merchandise, TV rights deals. Like people are willing to pay more money. for the product. That's why the the men's league, the NBA, makes more money than the WNBA. So fun fact about the WNBA is they've actually never turned a profit. The WNBA is owned by the NBA, so the NBA actually subsidizes the WNBA to exist. Now, I think with the this resurgence that Caitlin Clark has brought, and actually like the women's college basketball is actually now getting more views than men's. And I think that's actually going to start to be a trend that starts to stick. So I think kind of Caitlin Clark may have been the spark, but I think there's going to be others that are coming in. So, right now, this is what she's getting paid. But, if more people start to support women's sports, start to pack up the stands, that's more money that's going to go into their paycheck, right? It's all supply and demand. So I don't really understand a lot of some of these arguments that people make that, it's unfair. The system is unfair, right? Like, it is what it is. So NBA makes around $13 billion in revenue, while the WNBA makes around $200 million. Like we have NBA players that make more than the WNBA makes in an entire year. Like LeBron, right? Like Damian Lillard. These guys are making like $300 million on contracts these days. It's ridiculous because the TV rights deals have just exploded in popularity. So we have Richard saying Jerome Powell and Janet Yellen have no idea what they're doing. Yeah, I mean, I don't know. Like, my opinion is, like, why don't they just raise the interest rates more? Like, why do they have to keep topping it off at this number? Like, if we raise interest rates even more, wouldn't we get to our inflation goals faster? I don't know. I mean, I'm not an economist, but I don't know. I would agree, though. It seems like a lot of people are in power that have no idea what they're doing. All right. OJ says, why do they compare women to men? Look at the viewers. I will never watch women's sports. Yeah. I mean, I'll say maybe the only time that I've watched women's sports before is like during the Olympics. I'd say the fact that we're even talking about it, it probably means that something might change in the future. Like, especially if Caitlin Clark continues to dominate. So the team that she got drafted by, the Indiana Fever, they now have 36 of their 40 games. It's now going to be on national TV. So that, like, being on national TV obviously means you're going to get paid more via TV deals. So, I mean, it is a big catalyst there. So I think a lot more people are going to watch it. Like I do live in the Midwest, but a lot of people do have Caitlin Clark jerseys. It was all over my social media for like the past month. And they're breaking record viewers. So I think it's just a sign of things to come. And yeah, Richard, you're totally right. She actually is kind of in the middle of signing a $20 million deal with Nike. So she kind of sold out, right? She sold her soul to Nike. As you guys know, I'm not a fan of Nike, but yeah, I mean, maybe a sign of things to come for women's sports and players. Also, these like in college sports now, you get paid ridiculous amounts of money off endorsements, like the NIL deals. These are things that only recently started coming out. So this didn't exist a couple of years ago. And Richard says the WNBA doesn't make the same as the NBA. Very simple, Matt. Yeah, I mean, Richard, come on. Like, I know I'm probably preaching to the choir here, but you try explaining this to some people and they call you, misogynist or something like that. So yeah, not sure what we're doing there, but yeah, good to see. And hopefully a thing of sign of things to come. All right. So I did put out a poll a couple of weeks ago, kind of just describing or asking people, hey, like, what is your relationship status? I was a little bit surprised at some of these results. I guess I know that the statistics are like 50% of marriages end in divorce, at least in the US. So I was a little bit surprised to see that 4% of people said they were divorced. And 47% said they were married. 35% said they were single. I have a feeling, I'm only able to put 5 options, right? I think a lot of people in that married percentage, I have a feeling they were maybe married before, got divorced, and then got married again. Like they're on their second marriage. So that's why it might make that number look a little bit misleading. 35% single. I was actually expecting that number to be a little bit higher. So I can obviously see like YouTube demographics. Uh, I'd say vast majority of viewers on this channel are probably in that like 34 to probably like 55 range, which I'd say probably, might also skew some of these results. But kind of the reason why I brought this up is that, just more and more people nowadays, they're just waiting. They're either just waiting longer to get married, or two, they're just not getting married in general. And they're also having less kids. Now, both of these do have huge economic impacts for the future, right? Especially like in the United States, you're constantly having to keep churning and getting more and more people, right? That's why we kind of allow so much immigration in, is that we have all these jobs that need to be filled, and you're constantly expecting growth. You need your numbers to keep looking good, but my question is, if we start to have less and less people, how is that going to work in the future? And I think like these are kind of concerns we have now, but we're obviously not going to see the effects of this until maybe another like 15, 20 years. But I mean, there's already countries around the world that are already seeing these problems, right? Like I think Japan is probably best case scenario. Japan doesn't really allow too much immigration, and the people in Japan, they just work so many hours that a lot of them never get married. And they are now having like a replacement rate that's less than the amount of births. So their population is rapidly declining. And you guys know the Japanese economy has not done very well in the last 30 years. So, if that's what happened in Japan, like, what do you guys think is going to happen in the United States when we start to really feel the effects of this? And this isn't just happening in the United States. This is happening really in all around the world. I would say any industrialized, kind of first world country, this is starting to happen to. So just kind of the reason why I brought that up. And I did like a lot of people in the comments thought this was my way of like trying to seek somebody out, in terms of being in a relationship or something. I did have quite a lot of comments about that. That was that's quite the interesting way to pick up people these days. I will say my demographics are like 95% men, so I don't think that would work very well. But yeah, we do have a little bit more statistics here. So Americans are getting married older than ever. So we can see obviously people live a lot longer nowadays too than they did in the past. So this goes back all the way to 1890. Men were getting married around the age of 26. I like how it says at first marriage. And then it says women were getting married around 22. And then we can see that number actually dipped and got pretty low around the aftermath of World War II. And then it's been steadily rising ever since then. So now the age of your first marriage for a man is now 30. And for a female, it's now 28. Obviously, women are just biologically limited in what years they could have kids as well. So if women are only getting married around 28, potentially that might limit how many kids they could theoretically have, assuming they were waiting until marriage to have a kid. But just things to keep in mind, like these are numbers that are going to have profound impacts on the world, the economy, and the future. So we talked about McDonald's like earlier. Like, I mean, this is a ludicrous example, but like in the future, there's going to be less people that are going to be eating that McDonald's. There's going to be less customers, things like that. So I don't know, just things I'm kind of concerned about. And then, yeah, just kind of around the world, women are starting to have less and less children, where it's now almost getting to the point where we're almost not even at like replacement levels. So, world population is around 8 billion. It's possible that might be the peak, at least for now. So it might be a while before we start hitting new thresholds there. So let me know what you guys think in the comments. Like, am I the only one like thinking about this, or am I crazy for thinking about this like probably so far in advance from when it probably will have a lot of impacts on the world economy? So another comment here from Andre. Yes, it's by a company called Volatility Shares that shorts long-term VIX futures in the 4th and 6th, 7 months out on a daily basis. Okay. Yeah, I think that's the part that's a little bit different than SVOL. I don't think they do it that far in advance. And I don't know if it's on a daily basis. SVOL does, or Simplify does have like a really good YouTube channel where they kind of explain their whole strategy. I'm sure Volatility Shares, they're probably doing something similar, but strategy is probably a little bit different. I assume if they have a 26% yield, they're probably doing something maybe slightly more risky or aggressive than SVOL, which is around what, like a 17 to 21% yield. So yeah, that's kind of what I'm thinking about that. Yeah, let me know if you guys have any more like comments or questions in the chat. We can certainly look at some other companies as well. Those are kind of just all the slides or things I wanted to talk about. I mean, I do think these will have, you know, pretty big consequences. Like, I don't know how we change that in the future, but yeah. Yeah, we can go back to kind of just talking about stocks or news or anything you guys want to talk about. Take a look at ARM stock because it's been going down pretty good here the last couple days. Yeah, down 30% in the last 5 days. That's insane. Super overvalued. We can talk about some income ETFs too if you guys want. One I'm actually making a video on right now is the Bali one by BlackRock. This is one I don't really hear getting talked about too much. It's pretty similar to like JEPI. They actually even have the same exact expense ratio. Monthly payer. Yield is closer to around like 7 to 8% annualized. This fund has only been around since September of 2023. So not yet a full year. So that's why it looks a little skewed there. Assets under management, super small, but I'm not going to feel too bad for BlackRock. Trust me on that one. And then I do get requests sometimes for this one as well. This is actually pronounced Pappy or Poppy. So probably when I'm done with the Bali ETF, can talk about that. So anybody own Bali? I know I do have one subscriber. He's always telling me to talk about this company, and so far it's been doing pretty good. As you can see, like the NAV, which I always preach, is kind of the big important thing to look at. That's actually been going up as the stock market's been going up, and then it's kind of come down the last couple of weeks as the stock market's come down. So far in the dividend history, they have been paying dividends ever since they started out. It's kind of ranged from around 14 to 20 cents. So that's what's been going on with Bali. So Luis asks, what about O Realty Income? So I actually have been buying more and more shares of O. I'm pretty close to now getting to 100 shares, which potentially I could start doing covered calls, but my cost basis is actually, I'm actually in the negative with O. I bought like a good amount of shares in the 60s and 70s. Obviously, it doesn't look like a great investment right now, but you know, I'm always just constantly reinvesting the dividends anyway. So I'm kind of lowering that cost basis. And, you know, right now I'm almost a 6% yield. That's pretty, like, that's an amazing starting yield. So I'm continuing to add to my O Realty Income position. What about you? Are you buying any shares of O? Yeah, I mean, I think really like O share price, it's not necessarily because of anything necessarily going wrong with the company. It's just what's going on with the market. We have, you know, inflation that's just out of control. Real estate companies are constantly taking on debt. They're constantly taking out loans to buy more and more real estate. So, you know, the higher those interest rates are, that's going to eat into their profits. So that's why you see a lot of these real estate companies going down in value. And also a lot of these REITs, they often need to dilute shareholders in order to buy more companies. So that's why they're issuing out more and more of their shares. So that means the shares that you own are now worth a little bit more less. I like how this is called Cody's dividends with a K. Yeah. So, 12th biggest REIT, or I guess it is in this guy's portfolio, but I know it's definitely one of the biggest REITs in the world. So it is pretty cool that we get access to be a shareholder, get those monthly checks, great balance sheet, triple net leases, right? So we're having the tenants pay for a lot of the maintenance, the property taxes, and that's more money in our pockets. Continue to collect those monthly checks. Yeah, so I'm certainly adding to O to answer your original question. Almost at that 100 share mark. Yeah, so I don't know if anybody wanted to talk about like any cult-like investing income ETFs going on in the community. You guys know I like SPY to an extent. I actually just started a position in FEPI, which of course, right when I started buying it, the freaking ETF started going down. I did get somebody ask me like, "Oh, when will FEPI's share price start going up again?" Like, just because FEPI's done well doesn't mean it's like a magical investment where it only goes up. It will go down, just based on some of the holdings, right? Like if we look at what they're owning, a lot of these companies have went down recently. Apple that we talked about. I do like how it's like kind of evenly weighted here. It's not necessarily by how big market cap it is. Also holds on to a position that I just started in Palo Alto Networks, a cybersecurity company here. That's probably not too big in our dividend community. It could be because they don't pay a dividend, but I think that's going to be a big company for the future too. Yeah. So glad to hear we're both shareholders of O. I think it's pretty nice to be able to sleep very well at night knowing, hey, like that next monthly dividend check, it's probably going to come. So OJ says he's getting almost $1,000 from O. I'm going to sell half when it gets to 55 and the rest at 60. I'm going to sell all my REITs sometime this year. I want qualified dividends instead. Yeah, I mean, at this point, OJ, like that's like your own personal rental property. That is amazing that you're getting that much in passive income. But yeah, I mean, I assume you're probably wanting to retire off dividends one day if you're not already. And yeah, I totally understand where you're coming from, where you already pay so much to Uncle Sam, where like you're like, hey, what's a way that I can minimize that? But yeah, I mean, I guess like that means you would have to sell it, and then you would have to find something where you're getting that's going to make up for that $848, right? Like that might not be so simple. If you're buying a company like McDonald's, right, that 2% yield, I mean, sure, you can buy it, but you're going to get smaller amount in dividends. So I guess that's the trade-off there. Yeah, $848 in dividends. Yeah, I mean, I definitely hope to be getting to those numbers one day. I think right now I'm at like 91 shares. I'm making like $25 a month, something like that. And I just have it on drip, so the dividends just keep getting reinvested. So each month I'm getting more and more. It's almost like magic there. But yeah, that's what's going on with FEPI. Honestly, still a newer income ETF, only been around since October. So I do think this is going to be the true test for a lot of these income ETFs is like, hey, we've seen like every week there's a new income ETF that comes out, but stock market's done pretty well last couple of years. The true test is like, hey, how does it perform during a downturn? And how does it perform during that recovery? And I think the recovery part is where, that true test will be. But yeah, I mean, FEPI's done very well in their short history here. Like if we just look up the FEPI ETF, I mean, 25% annualized yield. That's pretty good. They keep the objective is pretty simple. Distributions have been pretty consistent. Be interesting to see. Looks like they're going to announce the dividend on the 22nd, so that should be what is that, Tuesday? So yeah, I mean, we'll see what that dividend is. It'll be the first dividend I'll start to collect. So I'm just going to keep reinvesting those FEPI dividends. I don't want to see that NAV erode, but I understand that's how the fund to an extent works. But you don't want to see that keep going down. All right, Andre, you brought me the cult-like holdings. All right, so FEPI. Yeah, I mean, I'd say so far FEPI has been performing well. So until it starts to either have that serious NAV erosion or people start to become delusional, I think it's still a decent ETF, income ETF. Then we have the old reliables and JEPQ, which, how is JEPI doing right now? I know it hasn't been doing super hot, and I know those dividends have not been as fat as they've been in the past. So past year, they're still up about 1%, which is probably definitely trailing the overall market. But yeah, I mean, this is still like, this one has been out for a while now. Like, I mean, yeah, it's 2020, but like compared to a lot of these income ETFs, this is what I actually like in income ETFs. You see, like when it launched, it was $51. Now it's $55. It's still paying you that dividend, which is still pretty fat. I think right now it's a little bit lower than it's historically been. But I mean, if you're still getting around that 8% dividend yield, that's definitely, that's one of the few things that's higher than inflation these days. Yeah, so that's what's going on there with JEPI, and then JEPQ, I believe, is performing a little bit better. So let's see how they're doing. So in the past year, they're up 12, almost 13%, and they're paying close to a 10% yield. That's super juicy. And that's why these funds are growing in popularity. $11 billion in assets under management is no joke. And you start to see a lot of these funds. You wonder why they all seem to be called like JEPI and FEPI, is they're trying to kind of replicate the success that JEPI had. So these two funds have done very well. And then SPY, they are a newer player, and they're managed by Neos. And they've done pretty well so far. They've been out since August of 2022. They've been very consistent in their dividend payments. It's like every single month, it's almost exactly like that 48-49 cent mark. So hey, if they're able to keep doing that, then I love to see that. So yeah, SPY has been doing pretty good. And then QQQI, this is the one that I just made a video about. This one is a little bit newer from what I remember. Yeah, I mean, it just launched start of the year. So, so far it's been doing pretty good. I know the dividends have been pretty fat. We saw how well that SPY has been doing. So I think there's a lot of, optimism in QQQI. They're going to be doing that on the NASDAQ 100. We look at their dividend history. Only 2 payments so far. Again, super consistent around that 59-cent, 60-cent mark. So we'll see. Still super basically in infancy for this ETF. So I think it's still kind of too early to make, kind of that final opinion or ascertain to how it's going to do in the future. But liking what I'm seeing from these two Neos products. So SPY-T, I don't think I'm super familiar with what this one is. Oh, it's a Defiance product. Okay. Let's see how it's been doing. So they only launched in March. So this is brand spanking new, but it looks like it's been going down. And if this is anything like QQQY, which is this other I think I'm gonna have to make a video on this one, guys. This one is like every month this keeps bleeding. Like, I don't know why people like some of these where it's like the strategy is just way too aggressive. Like, yeah, it might have a 40% yield right now, but this chart, this is giving me red flags. Like, I don't even know this, but I'm going to guess if I click on the dividends and I look at the dividend payments, I have a feeling it's going to have gone down since their first dividend payment. So let's see what that looks like. Yep. Okay. Yep. Just as I predicted, right? So the first time they paid 110 and it has steadily decreased ever since. It's now down to 79 cents. So that's kind of the risk with NAV erosion that I don't think a lot of people are maybe completely understanding because they're only maybe focused on the total income. And that's kind of what I fear when I see a lot of these maybe like cults like channels going on around where they kind of just show like a graph like this where it's like projected future dividends and they think that's going to be their like cash flow every single month. Just, a couple of problems with that, right? Like first, nothing is ever guaranteed in life, right? Like there's no guarantee that a company is going to pay dividends, or especially an ETF like this. And then two, if the company or the ETF is constantly eroding that NAV, that's going to be less capital for them to be doing those options trades, the holding of companies that they might be owning, treasury bonds. That's less of those assets. So how are they going to make the same amount of yield if that NAV keeps going down, right? Like, I think that's the problem that a lot of these people that kind of chase these super high yield ETFs are going to get run into. All right, so S12, yeah, I mean S12, I kind of like that ETF. I spoke with the fund manager, so my opinion might be a little bit biased there, but they've held up pretty well. So you will see my video or my interview with the fund manager coming out here next week. Then SIVB, believe we talked about earlier, and then YMAX. I might have to make a sequel to this video. Because they actually have done pretty well. I've been a little bit surprised on their performance. So let's look at how they've done year to date. Well, it looks like they've had quite the sell-off here just in recent days. But I was actually a little bit surprised how well they held up to their NAV. So YMAX is kind of combining all the different YieldMax ETF products into one. A little bit higher expense ratio for having that service, but I think there's probably a little bit less risk then, since you're kind of combining different holdings, right? Before it was just like if you had the Amazon one, you're just having like a synthetic exposure to Amazon. So a little bit less there. So I have been slightly impressed, I'll say, with how YMAX is doing. I know those dividends have been pretty juicy too, I'm sure. Let's look at that dividend history. 53, 56, 63. Yeah, so we'll see. I mean, if you can keep up the NAV and the dividends are, consistent, like, hey, people think I hate like YieldMax or something. I don't. Like, I hate to see people lose money. And I think a lot of their products so far, maybe I've kind of seen that, but that's not to say that you can't make money off them. So yeah, YMAX is doing pretty good so far. I'll definitely keep an eye on them. If they continue to do well, I might have to put out, an update video if that's what you guys want to see. So we have another message here from OJ. Says he bought QQQI, bought it to park cash. Yeah. Yeah. I mean, if you don't need the money, I can maybe see that, but it like, what if you actually end up needing the money and then the ETF does poorly? Like, you might have to sell at a loss then. Honestly, these days with Fidelity, like money market accounts, you can get 5% yield, like almost risk free. That is pretty juicy. Pretty juicy there. Luis asking, can you provide me with your opinion regarding investing in airline stocks? I'm thinking of the Southwest or Delta. I do fly on airlines quite a bit. Southwest, oh my gosh, that was a big disaster because I'm somebody, I need like a reserved spot. Like my anxiety will kick in if I don't know exactly where I'm sitting. Delta has always been pretty good. Usually I have good things to say about Delta. Let's see how they've done in the past. I remember, I think I almost owned an airline stock during C19 because that's when they like paused like all travel and these were at like a super big discount. Yeah, like around this time. Yeah, this is what I remember them being at, like around that $25 mark. But yeah, I mean, they've done very well since then. Honestly, the thing with like a lot of these airlines is it's basically like an oligopoly. Like there's only a few major competitors. Um, I'd probably pick Delta just over Southwest, just based on my experience, but that's not going off like any fundamentals. Yeah, I mean, I don't know. I, I mean, like the sentiment around Southwest, I don't think is as great as like Delta these days, which is funny because just a couple years ago, it may have been quite the opposite. But excuse me, I know when I was thinking about buying these in 2020, there was actually an ETF that I almost bought. It's called Jets. So Jets is actually holding a lot of these like airlines. Uh, and honestly, this is probably what I would have bought like a couple of years ago. I think it was trading for around like $13 around C19, which yes, it was trading for that, and it's gone up a little bit. I believe it paid small amount of dividends too. At least back in the day, it did. But yeah, I mean, Jets is what I probably would have bought if I was interested. Those look like they have a slightly high expense ratio. All right, so Richard says every month I'm trying to accumulate 20 to 30 shares of FEPI. Yeah, I mean, that's the thing with these is that like it can snowball pretty fast. Like if the strategy keeps up, like definitely potential to make a lot of money. Andre says I forgot the QDT. I hope that Yield Max holds it, even though it holds T Sly. LOL. Yeah, I mean, I've had, excuse me, a couple of requests to do the like the ones where they're doing like the 0 day or 1 day options trading. I think like Roundhouse ETFs makes those. I think like those are still relatively new where I'm just kind of giving a little bit more time until those ETFs have a little bit more history so I can see how they're kind of behaving, what that dividend yield might be. Um, Personally, I think like just kind of high level, those strategies might be a little bit too risky or aggressive for me. So that's personally just why I'm staying away. But I know like, yeah, I mean, if it goes well, potential is you could potentially make a lot of money in those fat dividends. So that's where that's coming from. All right, we got Julio in the house, and hey, Julio's been in our Discord, which I encourage the rest of you guys to join in. We're having some great conversations in there, so just make sure you join that Discord. So he's getting an 80% yield, guys, an 80% yield, and making $2,000 a month for life. Oh my gosh, it's so easy, guys. You guys can be like Julio, just getting an 80% yield. I'm sure it's risk free. I'm sure there's no chance of that going down in the future. Like you're going to be able to retire by the end of the year, guys. Man, Julio racking in those dividends, $2,000 a month for life with an 80% yield. It's so realistic too, guys. I mean, like obviously me and him are joking here, but this is kind of exactly how some people in the community are speaking. Like it's utter like foolishness. Like I don't know what to say. Like there's people that truly think like this. I'm just at a loss for words, man. All right, Andre, I agree. That is why I sold out of QQQY, IWM, and Tesla for a few months ago. I think these 50% yields are too. I appreciate you like having that self reflection and understanding that. Because like if you think about it, Andre, like if something was a 70% yield, like why wouldn't everyone be in the ETF? Like this would be like front page CNBC, Jim Cramer, they'd all be talking about this. But obviously there has to be some sort of risk when you're getting that high of a yield. You're being extremely aggressive. And honestly, like in the long term, I can't see that working out. Maybe in the short term, right? Like the ETF they keep talking about now that's just like doing very well is Coney or Coinbase. And that's because Coinbase or crypto has also been doing very well. But like this is also a company that could is extremely volatile, right? Like based on how Bitcoin is doing, that's going to impact this. But yeah, and sure, in the short term, I'm sure they've been rewarded quite nice, but I don't know. I think it's just it's just a black swan event away from just like totally imploding. Personally, for me, and I couldn't deal with that. And also, a lot of these people, they're not even diversified at all. It's like I look at some of their portfolios. It's like 100% Coney. I'm just like, I don't even like, and it's to top it all off. They then go and get margin on that, which is just so ridiculous. All right. What are your thoughts on FWONA? I see F1 go. Oh, yes. I'm actually a super big racing fan. More of a NASCAR person, but I thought Formula One was owned by like Liberty. I thought it was owned by a company called like Liberty something. I didn't know if it maybe recently changed its name, or it says here Liberty Media Formula One. Yeah, so as somebody that actually like occasionally watches F1, there's absolutely like no parity in F1, right? Like the same driver wins every single week. I don't know, it's just tough to say. That's super exciting. Like at least with NASCAR, you know there's going to be some variation of the winners. But yeah, I mean F1 is like company has done very well here, but F1 is just booming in popularity. Like I hear a lot of people always talking about it, like at work, especially the younger demographic. They're big F1 fans. Obviously, there's like the F1 Miami race. There's the one in Las Vegas, and then there's the one in Circuits of the Americas that's in Austin, Texas. The United States now has 3 F1 races. Those are huge money makers. Yeah, I don't see F1 going anywhere, but I think they're like, at least with NASCAR, there's certain like restrictions on like, the horsepower and what you can have under the hood. I don't know all the intrinsics of F1, but they need something like that because there's absolutely no parity in F1. And that I think that's going to hurt them in the long run. Like Max Verstappen is only 26. He's going to continue this dominance for years to go. So that's what I would like for F1 to do. Let's see how they're doing in their financials. You can see, yeah, I mean, every year they're kind of racking in a little bit more and more money. Yeah, you said here they started a cap on spending. Hopefully that limits Red Bull's dominance. It's absolutely ridiculous. It's at this point you're just like kind of, the real race is who finishes second. It's not who finishes first. But yeah, I mean, I think it's pretty cool that more like a sports league is like publicly traded. It'd be pretty cool if the NFL or NBA or MLB was publicly traded as well. I guess technically the Green Bay Packers are publicly owned. All right, we got Dennis in the house. He says, I own VT saxophone. Not super sure what that is. Oh, VT sax. Okay. That was a good one. You got me there. Yes. I mean, Dennis, this is what a lot of these cult-like people should just be owning. Like, I don't get like we reached a point where like owning a simple S&P 500 index fund is now considered boring. Apparently getting, 7 to 10% returns and being able to retire at a reasonable age, that's not interesting anymore. It has to be, Wall Street bets, YOLOing, retire by tomorrow, 70% yields. Like, why is that the new norm now? Like, it's like we live in this like instant gratification age where it's not like even just social media and stuff, right? It's like my financials also need to be on this level. And guys, there is no shortcut to becoming rich, right? Like, unless your parents are already rich, you're probably not going to just fall into some sort of shortcut. Like, you need to add in that value, find, these hidden gems. But for the vast majority of people, like just investing in a simple ETF is going to be good. Like VT Sax, expense ratio super low here. And it's always funny to me. These people are like, yeah, I don't mind paying that 1.29% expense ratio because I'm getting a 70% yield. So if you just do 70 minus 1, that's 69. Like these people just don't understand how math works. But yes, VT Sachs, like you can see in the long run, right? 10 years, 156%. That's a 15% return every single year, plus dividends on top of that, right? So like that's a really good return. You don't have to do any work. Over the long run, right? Since 2000, the year 2000, they've had a 290% return. Those are amazing returns. People can easily retire off of just owning VT Sachs, just being invested in the economy. Right. So if we hold on to VT Sachs, we're getting exposure to amazing companies, right? Microsoft, Apple, Nvidia. You got the Eli Lillys in there, right? You're getting 3,000 different companies by owning just even one share of VT Sachs. You're getting ownership of 3,700 different companies. But instead, people will be like, no, I want to synthetically own just one position, and I want that chance of 70% yield in a year. And it's just, man, I think like before I've said that like life is the best teacher, but I kind of changed that. It's not life that's the best teacher. It's pain. Pain is the best teacher. When they start to see that pain when the stock market doesn't do as hot, oh man, they're gonna regret like laughing at us owning just simple ETFs. Yep, I'm glad we can laugh about it, Richard, because like not everybody thinks like us, unfortunately. But hey, bank account's gonna be growing. Yeah, so OJ, I don't know, like they have a cap on spending. I have a feeling Red Bull, like whatever it's set at, like that's probably very easy for Red Bull to anyway obtain or like hit that limit. But like the smaller teams, I don't think like they're going to come anywhere close to probably that limit. So, I mean, I'm hoping that will cut down on the disparity. But like, like Haas is in NASCAR too, in addition to F1. Like NASCAR recently changed their car where like everybody kind of has like the same stock car, but there's still like the bigger teams are still dominating, but it's to a lesser extent than F1. So I think that's what's going to happen. But I mean, any parity at this point in F1, I think is going to be good. Trading fundamentals. I came here for the investing comedy. Hey man, like this is a chance for me to do my stand up in real time. So I'm happy to read any of your guys' comments. We can laugh at things together. That's kind of the whole point I'm doing this live stream. Otherwise I was gonna, make a video on Bali, but I can always put out that video. Also wanted to celebrate the, April 20th occurrence. Hope you guys like that thumbnail that I put out. Video is probably getting demonetized just based off that alone. All right. What's going on, Pokey? I've owned VT before Strongman. Yeah, I don't know if you guys watched Strongman's most recent video. He said he's declaring war on Kemmer. So we'll see how that goes. I'm an accountant. Strongman's an accountant. Like, I don't know if it's just because we have that like financial knowledge that maybe like we're able to kind of see some of these red flags that maybe other people aren't seeing because that might not be their like 9 to 5. I don't know if that's maybe it, but who knows? Yeah. So trading fundamentals. So like, as much as I wish I was in Bali, Indonesia, I was going to make a video on Bali, the BlackRock ETF that a couple of people have requested. It's a pretty solid ETF, but I got the script ready for that one. But pretty solid ETF. I like to see, even though there's a new income ETF coming out like every week, I like to see that. Like I like to see more and more options so that these ETFs, they're constantly being challenged to be the best, to offer us the best products. That's what I want to see. And it's also just, I think, better for us because now we can literally build like a kind of an arsenal, kind of a team of lots of great income ETF products that, once we kind of reach that milestone that we might be trying to reach, this is a great way to potentially get that income, hopefully when we're in retirement. All right. Trading fundamentals. I just left there. Yeah, I mean, you have to tell me how like South Asia is. Like I've only been to India before, but I'd love to go to like Thailand, Malaysia, Singapore, all these different countries, Vietnam. So you have to let me know how these countries are. I've heard it's super cheap there, and I've heard it's super like nice in terms of what you can get for your dollar. Crime is low, weather is beautiful. A lot of other things are beautiful there too. So I definitely want to check that out. Latin America though is on my list first. All right, Luis, how about Tilray? Just starting to add to the stock. I'm sure you mentioned that because of today's date, right, Luis? So I remember when this was a meme stock in like 2018. So let's see how they've been doing recently. This is back when, if we go to the 10-year. Yeah, I remember these days when it was 146 in like a span of a few days, and everybody was talking about it, and then it dropped into like a penny stock category here. I don't really know anything about Tilray. Like the place I go to, I don't think is a public company. So looks like we have an article though about we'll just call it, I don't know, the devil's lettuce to not get demonetized. But like I will say this, I do think, and I'm actually kind of surprised that Joe Biden didn't do this, or maybe I shouldn't be shocked, but I do think the devil's lettuce that will be made recreationally legal in probably the next couple of years. I don't think that's it'll still be a Schedule 1 illegal drug. It's already legalized in so many states. So that could potentially be good news for Tilray, I'm sure. More places to sell it at. But yeah, I know there's probably a lot of competition in this industry. And also, it's, one thing that absolutely needs to change. They absolutely need to change this is they need to remove it as a Schedule 1 drug. And then that way, when you actually go to a dispensary, you can actually pay with a freaking credit card. I hate having to go and like go to an ATM or use one of their ATMs and pay a fee and then start like, getting exactly $62.50. And then the state adds on all these other BS taxes on it. They need to do that. And then I would love to pay for it with a credit because right now that you're not able to use a credit card because it's still a Schedule 1 drug, and it would count as like drug trafficking if they allowed you to use it as a credit card. So pretty ridiculous, but all right, trading fundamentals. Yeah, hey, hopefully I'm in Bali one day and I'll definitely make a video of it. Richard King, most Americans have very bad economic literacy. Yeah, you're absolutely right. Like even you would think even like accountants, they would have like amazing accounting literacy, but there's been some times when like I've been with my coworkers and they're like, man, yeah, I just bought this like $30,000 RV. I'm going to be paying, payments on that for the rest of my life, even though like I'm already in like all this other debt. I'm like, man, yeah, you would think accountants would be a little bit better with money, but yeah, there's people there that think that like getting a bigger refund check from doing your taxes, like they think that's good news. Like when really you're just giving the government money for free, interest free, and then they're just giving you your own money back. So really, getting a bigger tax refund is not a good thing. But I would say probably like 80% of people don't know that. So I'm always a little, personally, I always laugh whenever I pass like by a tax like office and they like kind of advertise like, we will get you a bigger refund. I'm like, oh boy. Oh man, they're profiting off people's stupidity. Ooh, Julio, I did not know that your wife was Thai. I actually have a lot of questions. I will certainly be DMing you because I definitely have some questions. But no, that's awesome. I'm glad to hear about your wife and your son, and yeah, I'm sure you guys visit, and I'm sure it's a fun time. Let me know when we hit the road. Yeah, I gotta save a little bit of money, but it's definitely up there on my list. So yeah, I mean, how much like assuming like we leave out of the United States, like how much would a flight ticket be? And like how long is it? I think that's actually the part that scares me the most is the airplane ride. Trading fundamentals, it's amazing, inexpensive, and easygoing. Yeah, I mean, I definitely need to do a little like I do a lot of traveling, but it's only within the United States. Like I need to get outside of the US more. And I definitely need to experience that. Richard owns 200 shares of Tilray. I didn't know so many people owned what I thought was like an old meme stock from like 2018. Is there like some news going on with this company that I'm not aware of? Like, has this been talked about? Like these articles seem to indicate that it's not only a sell, it's a strong sell in all red from a CFA. I don't know, guys. Like, there must be a reason you guys are buying into this company. Apparently, there's recent acquisitions have impacted its balance sheet. Net debt is increasing, and operating losses are expanding. Yeah, so definitely keeping an eye on that one there. All right, trading fundamentals as a long-term investor, what do you think about buying an option contracts on companies like MMA? Yeah, this is the real estate one, right? Like Mid-Atlantic. Yeah, I've been wanting to buy this for so long. I think I remember when I looked at it, I think it was like in the $85 range. Yeah, in like 2018, I remember looking at it. It was around that price, and I thought it was overvalued then. And I know it peaked around $200. So it seems to have quite a bit of a sell off here. Yeah, I mean, I like real estate. Like, I feel like it's pretty hard to mess up with REITs unless you're Medical Properties Trust, which might have some fraudulent activity happening with their higher ups potentially. I don't know. At least that's what all the short selling news articles are saying. But I mean, who knows if that's true or not? But yeah, I mean, real estate, especially like apartment communities or complexes, like yeah, I can only see those being more in demand in the future. There's already like a severe housing shortage in the United States. The United States didn't build enough homes after the 2008 recession. So yeah, I mean, I've been trying to buy into MAA for a while. I didn't realize they had this big kind of sell off here. It's yeah, I mean, it's probably going to keep doing good in the future. Their fundamental business, like it's not like AI is going to replace it. I don't think like people keep saying there's going to be laws against like major corporations owning houses. I don't think that's going to happen because a lot of the people that are in power, they own a lot of real estate. They're not going to change the laws for smaller people. Julio says from Charlotte to Bangkok is at least 30 hours. Oh boy. Whew, I don't know if I could do that with 2 layovers depending on the season, around 1600 round trip. Ooh, okay. Yeah, I knew the flight was expensive. I guess it makes up for it because I assume like hotels and like food is going to be much cheaper than like if you went to like Europe. So that's probably the trade-off there. I would I'm somebody that like I'd probably have to do a detour there because I hate being on an airplane. Like even these like domestic flights in the US where it's like less than 4 hours, I'm like counting down the minutes. But yeah, no, that's good to know. I guess like my next question would be like, did you guys have like a language barrier? Like assuming people there to an extent speak English? Yeah, just wondering if there's like a language barrier there. All right, Andre went to Cambodia in 2009 and 2011. It was a 14 or 15-hour flight, including a 2-hour layover in is that Taiwan? Yeah. Yeah, I mean, I think like if there was a layover or a detour, I think I can maybe do it. I guess I just gotta suck it up, right? Just do it. I guess like also like how are you guys getting time off work and stuff for this? Because like if you're gonna go, right, like I feel like you need to go for a certain amount of time for it to like be worthwhile as well. Um, so yeah, but yeah, I think Latin America is definitely on my priority list. Like either like the Dominican Republic. Do you want to do a cruise somewhere? So those are ones that, um, ironically, I have a passport. I've only used it once, and it's probably going to expire next year, so I probably need to renew that. But hoping to do that. All right, guys, coming around like 1 hour and 30 minutes. So let me know if you guys have any like kind of like final questions. We'll kind of wrap it up here. Hope let you guys enjoy the holiday. Uh, kind of get back into investing. Um, but yeah, I mean, markets are, I think there's just so much uncertainty. That's the thing. Like, obviously this like whole Israel, Palestine and now Iran conflict is, I think that has a lot of people worried. We'll see how that impacts, like oil prices. And I saw the US did just like pass, if we go to CNBC real quick, they did just pass like some sort of bill that's of course pumping more US taxpayer money into these other countries. And then they're also potentially banning TikTok, which is great news in my opinion. So yeah, I mean, there seems to be kind of like bipartisan support for all this too, by the way. So it's not just like one person thinking all this. Yeah, I mean, obviously also we have the elections this year. That's going to, I think, cause a lot of volatility as well. There's actually been like some votes to get rid of this House Speaker, Mike Johnson, but I think that's just more theater. They've already done that once. This kind of cycle. But yeah, I mean that it's more money going toward Ukraine, Israel. Ukraine president is very thankful. I'm sure he is. It's always amazing to me, like we have so many of these like problems in the United States, right? Like people can't afford groceries. We have so many homeless people, but we always seem to have so much money to give to other countries. It always amazes me. Let's see here. So Ukraine, Taiwan. Yeah, I mean, people never really talk about the potential global conflict with Taiwan. I don't know if everybody knows like the geopolitical history of like Taiwan and China, but in a lot of people's eyes, like those are one country. And there is talks that China could potentially invade Taiwan. And Taiwan is a huge hub for like semiconductors, so that's why the U.S. is trying to keep Taiwan and offering a lot of military support. It's not because the people of Taiwan are so nice that the United States just wants to keep them all safe. It's because there's of course some economic interest there. So that's why. Andre says it's a great time to dollar cost average with the sell off that's happening. Yeah, no, I completely agree with you. I always get comments like, "Oh my gosh, like the stock prices fell. Should I sell?" And I'm like, "Oh man, like try to think about like why you bought the stock or ETF. Like, has the fundamental, uh, analysis of the company changed just because the share price went down a little bit when like every other company also fell?" Yeah, I think like investing is one of those things where like generally the more hands off you are, typically the better the results will actually be, ironically. So Julio says there's no language barriers if you stay in Bangkok or other major tourist areas. Even street vendors speak English. You can get a 5-star hotel for like $120 a night and food very cheap, like $4. I'm actually surprised that the hotels would even. I guess it's a 5-star, right? Yeah, 5-star for 120. That's what I was expecting. Um, okay, that's good to know. About the English barriers. I would assume people there to an extent speak English, and but yeah, no, that's great to hear. Definitely got to save up for it. And then Richard says they're also going to steal Russia's reserves. Yes, definitely. Yeah, I mean, I'm not gonna lie, I was a little bit worried when I saw the whole Israel and Iran thing. But it does seem to have cooled off in coming days. The U.S. already said they're not going to help them in any sort of offense, only in defense. So we'll see. We'll see about that. Taiwan was used as an unsinkable aircraft carrier by Japan in World War II against China. I know exactly the way you're pronouncing it, similar to the way that Trump's pronouncing it. Yeah, I mean, I will say, kind of going back to the whole birth rate thing that we talked about earlier. So from what I've read, if China were to do it, they would have to do it in a very small window in the next couple of years. The reason being because China had that one child policy for like decades that really is going to come back to hurt them now because now they had a whole generation or two that only had one kid. So they're rapidly losing their population. That's why China's worked so hard to now incentivize you to have more than one kid. So it's kind of ironic how that works. But yeah, they were saying that if China was going to invade, they would have to do that sooner than later because of the population. This is going to be kind of their peak for a while. Oh, hey, David, nice to have you in here. New sub here. Been enjoying your content in ETFs, just catching up on some of the older videos. Yeah, that's the thing about my content. I try to make it where it's like, it doesn't necessarily matter if you watch it like today or like 6 months from now. Like the investing thesis, the fundamentals of the stock or the ETF, that's probably not going to change. So those are, I think, kind of the major important things that I try to convey in the videos. Because like, yeah, sure, I can tell you about like news happening today, but that might only be relevant for a given point in time. But if you're kind of thinking and asking the right questions, that I'm kind of trying to convey in my videos, I think that's kind of the main points I try to hit with my videos. And that's why I think they can be watched even a long time from now, hopefully, right? Like this video I'm going to make on Bali, the Bali ETF, like you'll be able to watch it months from now because like the fundamentals haven't changed. So yeah, so glad to have you, David. Probably going to wrap it up here in a couple minutes, probably in the next 5 minutes. So any last questions or anything you guys want to talk about, just let me know before we say goodnight. But yeah, I mean, what do you guys think about the TikTok banning? Personally, I think it's good for society. I think that will definitely help the youth. I'm somebody who thinks like social media really shouldn't be used by young people. Also, if you guys saw this, Tesla cut the prices of some of their cars by $2,000. This I think tells you that Tesla probably was having some trouble selling cars to begin with. Also, this might relate to Tesla. Tesla investors have been getting hit pretty hard here. Let's see how much that ETF is down. Oh my gosh, in the last year, it's down 54%. I think I was checking the other day. Since inception, it's down like 67%. But it apparently has 107% yield because, that's super sustainable. Like this article, no reason to buy Tesla. Not even one reason. Man. Yes. So it has a picture of a garbage can. Yeah. So going back to Tesla, the company, they said that, they're missing their delivery expectations. Elon Musk is one of those people where like he says something, you have to take it at like half face value. Like I remember in 2020, I made videos where he was like, "Yeah, we're gonna have self-driving cars for everybody by the end of like 2020." It's what 2024 now. We're still not there. Um, Model Y base price 42,000, 43,000. I will say I do see a lot of people driving Teslas by me though, like especially in some of the more prominent areas. It's definitely like a wealth and status symbol, I would say for sure. But for the average person, probably it's still probably a little bit out of their price range. Yeah, I mean, there's also it seems like there's like a new EV company coming out like every month as well. It's like in addition to income ETFs, there's also new EVs coming out. And I fell for some of that hype too. Like, I made mistakes. I bought like Neo at its like all-time highs. That company has not done very well. But I mean, those are just expensive mistakes to learn. Pain points there. Um, Julio says that TikTok is making everyone dumber. Yes, I completely agree. Even like Instagram has like those reels. Yeah, I mean, I never downloaded TikTok, but I have like recently started getting a little bit into those Instagram reels. The algorithm knows exactly like how much time you're spending on each video, because I've noticed like if I watch one particular video for a little bit, like the next video they suggest is on the same topic. It's like, whoa, these algorithms are too powerful. But yeah, I mean that's facts, guys. But yeah, I mean hopefully you guys have joined the Discord. We can talk more in there. I do want to try and make these videos more often, whether you're catching it live or after the fact. I think it's great to have some of these like just dialogues where it's not kind of more scripted. But yeah, appreciate all of you guys that were able to join us. Hopefully start to make these a little bit more consistently. And then yeah, Pokey's been seeing more and more Rivians in town. I definitely see those like the SUVs of the Rivians. I don't know if they're super nice cars, but I've heard good things, and I'm definitely starting to see more of those around. But all right, guys, I think I'm gonna call it there. I appreciate everyone for stopping by. Be sure to, as you're leaving, be sure to hit that like button. Make sure you're subscribed if you're not. We'll definitely talk again here soon. Make sure you guys don't fall for any cults. And we'll definitely do this again. Let me know what you guys want to see too. Like, always trying to think about ideas and all that. So hope everyone has a happy April 20th, and stock market highs will come again here shortly. All right. Have a good night, everyone.